Ready to start your ESG journey? Get going today with Social Suite, and you could start reporting publicly in 30 days. With investor pressure mounting and regulations just around the corner, there's never been a better time to start your ESG reporting. Social Suite takes the complexity out of environmental, social, and governance reporting. Social Suite helps organizations to measure, monitor, and report on their progress with fast, simple, and affordable software. Create value through ESG in order to raise capital, improve brand and reputation, as well as mitigate risk. Social Suite has helped almost 100 micro to small cap companies report on ESG, with some starting their baseline report in under 60 minutes and reporting publicly within 30 days. ESG is a lot easier than you think, and you're probably already doing it. So take your sustainability reporting to the next level with measurable progress. Start your ESG journey today with Social Suite, an ESG software company for micro to small caps. Visit socialsuitehq.com. That's social, SUITEHQ.com to learn more. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Bryan Freeman, Executive Chairman of the Real Good Food Company, publicly traded company. The symbol is RGF on NASDAQ. Real Good Foods is a leading health and wellness frozen foods company providing a better way to enjoy your favorite foods. The company's mission is to provide real food you feel good about eating, making delicious, nutritious foods that are low in sugar, low in carbohydrates, and high in protein. The Real Good Foods family of products includes breakfast, lunch, dinner, and snacks available in over 16,000 stores nationwide with additional direct-to-consumer options. I've interviewed companies in the frozen food space over the years, and I wanted to chat with Bryan today about the industry as it exists today, especially since COVID, as well as how RGF positions their frozen food products and the frozen foods total addressable market, Real Good Foods product differentiation, digital marketing strategy by working with social media influencers, and their growth strategy and path to profitability. With that, please enjoy my conversation with Bryan Freeman, Executive Chairman of the Real Good Food Company. Bryan, thank you for joining me today. How you doing, man?
I'm doing great. Thanks for having me. Looking forward to doing this.
Absolutely. And look, you guys just reported earnings. Isn't it fun earnings season? You gotta love earnings season time, right?
Absolutely. We just absolutely love earnings season. But no, all kidding aside, I kind of enjoy the rigors of quarterly reporting, and done it a lot in my past career. And it's certainly being a public company, dirty laundry and all gets out there, and that's one of the good things about being public. Frankly, it makes us a better company.
Absolutely, it's all about that transparency.
Yes, sir.
So, first line I always ask everybody on here is, what would you say is that one line that best describes the Real Good Food Company?
Yeah, I mean, at Real Good Foods, we're here to modernize frozen food by making more nutritious products that are craveable for as many people as possible.
That's
nutrition. Great. Yeah. Do you like that one?
That's good. I like that. Look, hey, that gives us a lot of meat. No pun intended. So, look, the company's been around for a little bit. Let's get that overview in history. What was the original thesis for its start, and then how did it get to where it's at today?
Yeah, so the company was founded in 2016 on the premise that all of us are eating too many carbohydrates, too much sugar, and not enough protein in the foods that we actually all want to eat. So I don't know about you, but I know that I'm not going to stop eating Mexican food or Italian food or all the things that we want to eat. And the problem is the more of that stuff you eat, the more obese you become, the more health problems you have. We've got a third of the population that are either pre-diabetic or have diabetes, according to the CDC. 57% of all U.S. adults try to reduce their carbohydrates over the last 52 weeks. Why do we do that? Because we now understand. I think everyone understands that carbohydrates are really sugar. And there's never going to come a time where any of us are going to say, hey, I want more sugar in my diet. So it's really simple. If we can get the sugar and carbohydrates out and replace it with protein in really craveable products like enchiladas, we're going to grow a business really fast, really big, while doing good for everyone. And so that's our whole mission. I think it's why we've grown so fast, in the frozen food section. Why frozen food? Well, I mean, walk the frozen food aisle. There's nothing in there. It's very difficult to find anything in there that's not loaded with carbohydrates. Even the brands that say that they're good for you, if you turn them over and look at the nutritional fact panel, you won't be able to tell the difference in terms of the amount of sugar and carbohydrates and the lack of protein as like a Hot Pocket or Stouffer's macaroni and cheese. So that's the opportunity. We're executing that plan, and that's why we've doubled the business last year, and we're going to come close to doubling it this year. And we think that we're just getting started. And I'll talk to you more at an appropriate time about the overall size of frozen food in America and the North America for that matter, and how we think we're really only in the second inning of our growth journey.
Absolutely. Hey, let's stick that in right now. Tell us why not? I mean, you set me up. So tell me.
All right, cool. So frozen food in America is about $58 billion category. It's growing at about a 6% 3-year CAGR. And, real good foods. I mean, we guided to 150 million in revenue for this year. And on the quarterly call, we said that, we see 200 million for next year. So we're still really small and young, given the size of the category, and the category is growing. Now you go walk the frozen food aisle and you go and look at our products. That strong differentiation is why we think that we've got a lot of growth ahead. And what we've said publicly is, our view is we can get this to $500 million in 3 to 5 years. The other thing I would mention is, our household penetration. What's that? How many people have actually bought your product in the prior 52 weeks? Is up to 8.6%. So 1 in 12 U.S. households has our product today. Number 2 only to Amy's if in the better for you segment of frozen food. That's a remarkable number given the fact that we've only been in grocery stores for less than 5 years. We view household penetration as a leading indicator for future growth. That's a lot of folks that, want our product, and shows that our thesis around carbohydrates and sugar is durable and growing.
Absolutely. All right, let's get into the product set right now. If you go on your website, I mean, it really runs the gamut. You got chicken nuggets, General Tso's chicken, breakfast bowls, So tell us what, some of the products set, what tends to be the most popular bought product, and then also where it's currently sold. I think I saw in the most recent press release, like about 16,000 stores. So can we get into all that?
Yeah, for sure. So our strategy is different from other frozen food companies. What you see when you walk the grocery aisle is you'll see a brand in one segment of frozen. So as an example, you'll see one brand that only does entrees. Okay. In the case of Amy's, they do 2. They do frozen pizzas and they do single serve entrees. Our strategy is how do we solve for these problems of carbohydrates and sugar for all day parts and all eating occasions? So that gives us permission. You'll see us show up in the frozen breakfast category with our breakfast sandwiches and breakfast bowls. Then you walk down the aisle and you see single serve entree bowls. So you see our entrees there. That's 2. Breaded poultry, or otherwise known as chicken nuggets. That's another category within frozen. And then snack and appetizers is a 4th category that we're in. What does this mean as a potential investor? It means that instead of having to get to $500 million in revenue in one category, which I would say is pretty hard to do, our job is to we can get there participating in 4 categories. And we only need a modicum of success to get to $500 million given the size of the category. Real Good Foods is winning. What does that mean? Our velocities. Let me back up. What do velocities mean? That means how much product you're selling per store, per item. We're typically in the top quartile of velocities in the categories we participate in. So if you've got products that are turning well and are bringing new users to the category for your retail partners, then you then have permission to extend distribution. And like you said, I mean, we're in 16,000 doors today, but we only have about 10 items per store. Our job is to extend that to 30, 40 items. And if we do that, we'll get to, $500 million in revenue in 3-4 years.
Absolutely. Now, another question I have for you is who's that target customer? And I want to preface it with this. I'm one of those folks that I'm a big ingredient looker. Me personally, I tend to avoid things that have tons of ingredients or none of the seed oils or anything like that.
Yep.
So who would you say is your target customer for the Real Good Food product?
I love how you went to a specific need state instead of demography. One of the things that we're pretty passionate about is we think that looking at consumers based on demography is antiquated. Millennial,
Agreed.
Gen Z. I mean, that is
Agreed.
so 1990s, and it doesn't work. And one of the reasons why we're winning is we never took that approach. We took our approach based on specific consumer need state, regardless of socioeconomic or age group. So we have 6 verticals. And so one will be, as an example, restrictive diets such as diabetes. Okay. Folks who have that situation, we're going to talk to them differently, and they're looking at our products to solve that problem. On the other hand, we have on the other side of the scale, we found that gamers, Call of Duty players care a lot about nutrition and convenience through microwavable food. And so we have community managers that organize that community and interact with them through micro and nano content creators. We have fitness folks, people who are just really interested in fitness. But with regard to how you're thinking about the category with the clean ingredient statement, our view is that's sort of table stake. Why would you commercialize an item today with unnatural ingredients? I think that is table stakes, and we're obligated to do that with all of our products. So anyway, to summarize, 6 different verticals, individual community managers for each of those verticals. We communicate out to 1,500 micro and nano content creators. And the result of that is today, Real Good Foods has the largest social community footprint of any frozen food brand in America. Go on Instagram, check us out, and look at the number of followers, look at the engagement, go on Facebook, Pinterest, right? TikTok, look at what we're doing, and then compare us to another food brand. And, the good news for us in the frozen food industry is they're like back in the 1980s or 90s. And so compare us to our peers, and I think you'll see why we're winning and growing so fast.
That's interesting. Why did you decide to go down that path?
I come from large frozen food businesses, and I've seen total destruction of capital of large frozen food companies, hiring agencies, and all the rest. Meanwhile, about 10 years ago, I saw a company called Quest Nutrition just crush it on Instagram. And it's my belief they were the first to leverage IG for a food item. And the guy running marketing over there was a buddy of mine. And I would literally go over there and hang out and just learn. And I just got so envious of what those guys were doing. And I said, if I get involved with another early stage business in my career, I want to learn from that, amplify it, make it better. And that's what we've executed on over the last 3-4 years of Real Good.
Social Suite takes the complexity out of environmental, social, and governance, or ESG reporting. Social Suite helps organizations to measure, monitor, and report on their progress to create value through ESG in order to raise capital, improve brand and reputation, as well as mitigate risk. Social Suite's software platform makes ESG reporting fast, simple, and affordable. Companies can start building a baseline report in under 60 minutes and start reporting publicly within 30 days. Start your ESG journey today. Visit socialsuitehq.com. That's social, SUITEHQ.com to learn more. So I want to take another step back and go to the beginnings. Back, 2016, you got the product, it's ready to go. You're still optimizing. You maybe have a couple products. What was the process getting it into stores and getting shelf space and maybe displacing some of the other legacy items that were there?
Yeah, so in 2016, the company was founded, and our founder was really selling the product online, direct to consumer, and building a sort of what I'll call a cult following for some of the initial products. I came along in 2017, and my job was to really, take the food, scale it, and then go into retail grocery. And what I'd say with the frozen category in general is, you really need experience, working with these retailers. I've personally been in the frozen food industry for 20 years. Prior to Real Good, I was with Advanced Pierre Foods. It's a multi-billion-dollar frozen foods company, and Tyson, and so I brought several people from Advanced Pierre with me, and we've got a really talented, highly motivated team that came over in 2017, 2018. That's really helped scale the business from essentially, we were doing about $500,000 in 2016, and to go to 150 this year is pretty cool.
Absolutely. I got a dumb question for you. I love asking these dumb questions. You ready for a dumb one?
I'm ready.
Okay, here we go. So, I mean, look, you see the explosion of Shark Tank and stuff like this. You see a lot of these frozen foods that go on there, and some of them get deals, some of them don't. But you end up seeing some crazy growth in some of them. The brand, and I'll be honest, I think the branding's really cool. I haven't tried the food, but was there at all a thought like, hey, maybe, I don't know, take it to Shark Tank, do it kind of like that, and do it like, I don't know. Like I said, this is a really dumb question. I'm sure my audience is like, Bobby, what the hell are you doing? But like, I don't know. I'm just looking at it. It's like it has good eye appeal, I can tell.
Yeah, no, it's the way I think about it is things like Shark Tank, or let's go get a Kardashian involved or whatever. What that's going to do is get you awareness, but I'm not sure it's durable. And so where we've invested our time and money in is micro and nano content creators. And our thesis is those conversations, we have hundreds of conversations going on every day with our community, those authentic one-on-one, two-way conversations about the food, about what we stand for, about what we're trying to do to help each other, are more durable. And you build a more passionate, loyal base of consumers. It takes more time, but it's my experience that if you go do something big, and you go pay a Kardashian, or fill in the blank, you get a big burst of awareness, but I'm not sure it lasts. And what we're trying to do is build the foundation, which we've done and are doing, that gives us permission to be here 10, 20 years from now. And I think you do it with small content creators that may only have 5 or 10,000 followers, but the trust level between them and their community are very strong, and the engagement very strong. So that's been our strategy, and we'll continue to build it out. The other thing I wanted to mention regarding the marketing piece that we're doing that other food companies I'm not aware are really leaning in like we are. We have over 250,000 SMS text subscribers. So, and when we push a text out to you, we get about a 90% open rate. And obviously, when our products show up in your area code, we're going to give you the good news. Or if they go on deal, we'll give you the good news. Having that connection with the consumer, and remember, they opted in to get those texts, is really valuable. And that's how we're driving incremental users to the categories we participate in.
So another question I have for you, in the food industry, I've done a few interviews with some other folks in the food industry right now. And over the last, everybody's been struggling with COVID and supply chains and all that stuff. But love to hear how Real Good Food, assuming that there was some sort of supply chain issue with getting food and getting product, was there an issue? And if there was, how the company overcame it?
Yeah, I'll tell you, like I said, I've been in this for 20 years, never seen anything like it before, in two areas. One, during COVID, was just supply of labor. It was really hard, and that trickled throughout this entire supply chain. So every day was an adventure. And then two, what we've seen just recently over the last couple of quarters is significant fluctuation in our commodity costs, our core commodity input. So, rather than rehashing COVID, we got through it. It was hard, long hours, and you've got to have really committed folks. We got through it. But I'd like to talk about what happened in Q3 and what we see happening in Q4, kind of bring it forward to today. And
let's do it.
What I'll tell you is in Q3, you saw our gross margins down, and that was a result of very expensive commodity costs, specifically in raw chicken, cheese, and our pork-based products such as bacon, really flowing through the quarter as a result of finished goods and input cost inventories associated with Q2. Good news is we are finally through that, and we've really seen a collapse in our commodity costs in Q4. And what we said on the call is we see as much as 6 to 10% gross margin improvement just based on commodity cost improvements. And so to just help you dimensionalize just raw chicken costs, the 5-year historical mean for the speck of chicken we typically use is about $1.42 a pound. And what we saw in Q2 and flowing through in Q3 is prices as high as $3.60 a pound, historically high prices. Fortunately, it was a supply and demand dislocation. Fortunately, supply has really come on the market now, and we are buying material today significantly below the 145-year historical mean. So that's a significant tailwind to our profitability in Q4. We're seeing the cheese market soften as well, and bacon prices have actually come down as well. So, that's a significant change and catalyst to our profitability and gross margin story for Q4. And we think it's going to continue to play out into 2023.
I gotta ask, what was the change? Why was there now a collapse in some of these commodity prices?
Yeah. So it's largely cyclical. And what we saw during COVID is the chicken processors such as Tyson. Tyson represents about 22% of total supply of chicken to the market. They simply were having difficulty getting people in the plants to process the chicken. And then you had an avian flu outbreak occur. And so it was a perfect storm. And we saw these historically high prices. With those high prices, what happens? And, other suppliers start to provide supply. And, as we all know, everyone's back to work now. So our attendance rates in our plants and everyone else's plants are, up. And so, Tyson on their quarterly call earlier last week, said that they're going to bring on as much as 4% additional supply, and they're going to lean in and continue to increase supply. Others will follow. And so that's what's really driving the chicken supply market right now.
Got it. So another question that I always ask everybody on here is, look, it seems like the Real Good Food Company is an easy story to understand, right? You sell them health and wellness frozen food products to the masses, both, direct to consumer and also in stores. But, you've been doing some conferences now for a little bit. I mean, what do investors get most confused about still when they hear the story, even if they're familiar with it?
I think it is a simple story. I don't think investors really get confused, and they see the opportunity. They understand the brand and what we're doing. I think they see, management's background, how we're not first timers doing this. So, I think it's just, a matter of time for market dynamics and the broader equity markets to kind of turn around. And I think those that are leaning in with us now will be rewarded. That's kind of my view of it.
All right. So you know what I'm going to do? I'm going to ask a different version of this question.
Okay, let's do it.
What are some of the most frequently asked questions that you get when you do one-on-ones and meet with institutions, all that kind of stuff?
Yeah, it's a great question. I think, they want to understand, obviously, everybody wants to get a feel for what's going to happen in the future. They want to understand what's going to be your growth driver and what are your catalysts to profitability. And so on the growth driver side, it's a distribution story. Just to help dimensionalize that, Today, Amy's, which is about a $600 million a year business, has about 1 million points of distribution in the United States. We only have 160,000 points of distribution. So we're still a young company that has a long runway of growth just through distribution. Okay, so that's number one. In terms of catalyst to profitability, it's pretty straightforward. We finally got through the commodity headwinds, and now it's actually turning into a tailwind. And second is our conversion cost. What does it cost us to make the product? And what we've said publicly is we took the proceeds from going public in November and really invested it into a state-of-the-art, very high-speed automated facility in the Midwest. That facility is online now. It's running at a nice pace during Q4, and so that will bring down our conversion costs. So those two things combined, plus leveraging the existing SG&A, gets us to a path of profitability and positive EBITDA next year.
For sure. And that was literally going to be my next question was, I'm sure that's probably the number one question you get all the time, path to profitability, all that stuff. And, going down the road of let's say looking at comps, to maybe put some more things in perspective, looking at fellow comps, what have been some of their cycles when it comes to, from beginning to, getting sales, ramping up sales growth to then starting to turn a profit? I mean, is Real Good on a similar trajectory, or maybe I think that would be good to get some more perspective there.
Yeah. I mean, if you go back 5 years or so, even longer than that, what you saw happening is when capital was and interest rates were basically at zero, what you saw were company entrepreneurs and leaders really just doing growth, only worried about growth and not worried about profitability. And in my mind, you saw a total destruction of capital in some of these, and you guys know the names of some of these businesses that have destroyed hundreds of millions of dollars and are still not profitable today and are still saying, oh, we'll do it in 2024, 2025. Today's environment requires experienced, committed management teams that know how to make money. And to me, that's the team we have over here at Real Good. So I would say, given how young we are, we're further along the path than others that are predecessors. And so, it's not just about growth. It's about profitability, and we're committed to that. And I think it takes a commitment from the folks that are operating the business all the way down to the our talented team that's out in the processing facilities.
For sure.
It's being committed. This whole playbook about, I'm just going to grow the business and we'll do more equity rounds and all that. Those days are long gone. And because now investors can get yield out of treasuries. And so if they're going to come into these growth assets, investors want to see, free cash flow positive. They want to see EBITDA positive. And last comment I'll make is, back when we went public on a roadshow a year ago, we said we would not be profitable until 2024. And when we saw the market turn over, we came forward, I believe it was in January of this year, and said, hey, we're going to bring that a full year forward, and we're going to be EBITDA positive in 2023. And we said we're going to be adjusted EBITDA positive in this quarter, Q4 2022. So, that's what investors want to see, I believe. And I think as being good stewards of capital, that's what we need to go execute.
Absolutely. Hey, one last question on that. For those that they look at those first two line items, right? They see revenue and then cost of sales. Cost of sales is high. Can you explain that a little bit? Is that from the strategy of working very closely, with digital marketing and stuff like that? Love to learn a little more there.
Yeah. So in terms of gross margin, just in the frozen food industry, world-class players, multinational, multi-billion-dollar businesses in the frozen food industry will have about a 32 to 35% gross margin. Okay. Our goal in the short and medium term is to achieve, high teens, low 20s. If we do that, I think you'll see us be EBITDA positive. But that's our goal, and that's what we're trying to do. And over time, as we fill up the plants, continue to scale, our long-term goal is to be world-class, which would be about a 32 to 35% gross margin. That's our goal for the long term.
Got it. One more devil's advocate type question for
sure.
you. In your opinion, you stated some of the goals for the company, not just EBITDA positive, path profitability, but then also getting to $500,000 in sales. I mean, what would you say are some of the company's downside risks that could halt some of those goals that you hope to achieve?
Yeah, I think for me personally, the way I think about it, the revenue story, I don't really. If I were to rank risks, it would not be in the top 3 or 4. I feel pretty good about the momentum that the brand has, high household penetration, the repurchase rates on the product, our social community. I don't think it's a revenue issue, or I would not rank that as one of the top risks. I think just increasing our gross margins to achieve 22, 24, 25% gross margins as quickly as possible. That's hard work. Those are hard yards, block and tackle every single day, and that's what we're focused on. And I'd say that's what we're really maniacal about. Like internally, we're not working really hard. Strike that. I don't mean that we're not working. We're focused on margin. The revenue is coming and is there. And then the other thing I would say, just filling up these plants as we continue to get scale. Things get a lot easier all the way down, up and down the P&L line. Does that answer your question?
Yeah, I mean, I would follow up with, so I get when you say that you're not too worried about on the revenue side of things. But I guess maybe what would be the downside risk on margin, right? Like the focus is on margin, where could that potentially go wrong? I mean, we're in an inflationary environment, even on the revenue side too, right? Like, again, we're in this inflationary environment, the spending might potentially be going down, I just wanted to hear a little more perspective on that side.
Yeah, sure. I mean, look, commodity costs can always go against you. But what we're seeing out of the poultry producers, that's our number one commodity. We feel really good about it for 2023. On the revenue side, look, I mean, we've just got a lot of momentum right now. And our new products are working really hard for us. Our breaded poultry, we put it on shelf in one large national retailer, and it is in the top 10% of all items in that door, outselling the majority of Tyson Purdue our chicken nuggets. So we're really excited about the performance of that. Now what the sales team needs to do is just increase the distribution of that, and the revenue will come. So there's always going to be commodity issues. Freight, you could see a downside risk with freight maybe. But what I believe we're seeing in the economy in general, just talking on a macro point of view, it was a supply issue, not a demand issue that was really driving inflation. I mean, we shut the economy down and then all of a sudden turned it back on. And I think, yes, I understand that the Fed put too much liquidity out there, but to me, it was it was more of a supply side dislocation, not demand. Now we're going to crush demand going forward by the Fed actions. But I really view Real Good Foods as a safe harbor for that. And here's why. If you go back and look at how frozen food did in every economic downturn in recent memory, and I was in frozen food in 2008, frozen food actually benefited. Why? People stopped going to restaurants and they start eating more at their home. And when you eat at home, you want convenient, complicated food. Frozen food is a great solution for that. So frozen food benefits from economic downturn. Secondly, when you bring it down to the Real Good Food side of it, there's two things I would say. One, our distribution footprint is, we are over-indexed in what I'll call value-oriented retailers. Our retail partners are those that deliver value. They're not luxury, retail outlets. That's not where we sell our products. We're very much into mass, and we're in the club channel, and that's where the user gets the most bang for their buck, and that's where you see foot traffic will actually grow in a recessionary environment. So, and then finally, our brand design, we're delivering more protein than our conventional counterparts. In most cases, 2 to 3 times more protein. And for those families that are really feeling the pressure through a recession, they're looking for protein in a way to nourish their families, and that's exactly what we do. So I view us as sort of a safe harbor as the consumer continues to come under more and more pressure in 2023.
Those were the exact same sentiments that I interviewed Mama Mancini's not that long ago. And it was a very, very similar mindset, right? And it makes total sense.
Yep. And the data proves it out. I mean, frozen will benefit from this.
For sure. How do you think about it in terms of that being like a cyclical blip versus like still just a continued, is that something a year from now that we're going to be like, all right, recessionary environment. Yeah, we saw growth in sales right here, but now decline. I mean, I'm sure those are things that you think about in terms of when you just think about your own supply demand controls within the company.
Yeah. So look, no one has a crystal ball, but my view is I actually believe that we may see the Fed reverse course in early 24. I really believe that. And look, I mean, we're in this sweet spot where we're delivering protein to families who are really under pressure, and we have a distribution footprint that is where they're already shopping, and that foot traffic will grow. And then, in an up economy, I mean, people are always going to be trying to look at their sugar and carbohydrate intake and want tasty, craveable food. So, I mean, I know it sounds like I'm pitching my book, and I am, but I'm telling you, that's how I see it. I really see it playing out. I would be worried if we were some luxury item that people, could trade out of. But our brand differentiation is pretty unique.
Absolutely. All right. So we're there, but my final question for you today, to close this out, again, from what you can tell us, and you mentioned a little bit in terms of your growth, where you want to see the company, that $500,000 in revenue. Where do you see the company in 3 to 5 years? And then what would you say are the inflection points that will get you there?
Yeah. I think in 3 to 5 years, we'll be at $500 million in revenue. It's a highly profitable business at that point because, we can get there with our existing manufacturing footprint and our SG&A. So we'll really start to leverage what's going on below the line. For us, it's just simply increased distribution and just running that play. And just, we have the products capable of driving that revenue. And all we need to do is just go get the product in front of the consumers so they can buy us.
All right. I think that's a great place to end it. Bryan, where can our audience go and find more information about the Real Good Food Company?
It'd be great to go on IG at Real Good Foods. And obviously we have a website, but I think to get a feel for the brand and understand what we're doing and seeing the engagement and love, check us out on IG, or we have a VIP group on Facebook, We Went Old School. You'll learn a lot about us that way.
Facebook is old school now? I love it.
It's totally.
And just in case, the website for everybody listening is realgoodfoods.com. They have an investor center and everything there as well. Yeah. So, Bryan, thank you for joining me today. I really do appreciate it. Good luck. Stay safe. I look forward to our next update.
Thank you.
Thank you.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.